morning, everyone, and welcome to Let's Trade the Crude Oil Inventory Report. My name is Gail Mercer, and I will be your host for this morning. Now, before we get started, I would like everyone to review the Nadex risk disclaimer. It is for your protection as well as ours. And basically, you just always need to remember that anytime you're trading, whether it's with binary options or other instruments, that there is a risk of losing money, okay? So I'm going to give you just a couple of seconds to read over the disclaimer, make sure that you understand it so you can then proceed with the webinar this morning. Now, for those of you that do not know me, my name is Gail Mercer, and I have well over 15 years of trading experience now. I actually started out with a company that programmed indicators for TradeStation, MultiCharts, and NinjaTrader. And to be quite frank, I just fell in love with the price bar. I thought that was the neatest thing I had ever seen. I do specialize in price action, volume analysis, and divergence because I believe they are leading indicators. I'm also a frequent contributor to Stocks and Commodities magazine, Traders World magazine, and Top Shelf. I've also been a speaker at Traders Expo, Traders World Online Expo, and the Wyckoff Volume Conference. I'm the author of 3 books on trading binary options. They are Trading Nadex Binary Options Using Currencies, Trading Nadex Binary Options, Keeping It Simple Strategies, as well as the New Trader's Guide to Trading Nadex Binary Options in Spreads. Now, how much does crude typically move from the crude oil inventory market report? Well, the typical average range immediately after the market report is anywhere from 80 cents to $1. Now, during the summer months, it can be slower, and it could take actually all day to get that movement. So that's one thing to consider if you're trading the crude oil inventory during the summer. Now, it's also correlated with the Canadian dollar. For those of you that do not know, Canada is the 7th largest producer of oil. And the CAD is actually positively correlated with crude. So if crude goes up, the Canadian dollar goes up as well. And this is typical. Nothing is 100% when you're trading, okay? So if you're trading crude and the U.S. CAD, because the CAD is the second symbol in that pair, it's actually a negative correlation. And that means if crude goes up, the U.S. CAD will go down, okay? And this is just an example over on the left-hand side. This was the crude oil inventory report on June 7th. And you can see that crude dropped, but the U.S. CAD actually went up. Now, one thing I also want to clarify, if there is a Canadian announcement, that correlation will not hold typically, okay? It's only when there's no other report except the crude oil inventory. Typically, you will see this correlation play out. And what that means is not only can you trade crude, but you can also trade the U.S. CAD, whichever one you want, or both. Now, before we get started looking at how to trade this market report, I want to just briefly go over my website. Is tradershelpdesk.com. And if you have any questions, you can always email me directly at gm@tradershelpdesk.com. Now, I want to go ahead and show my charts. And as you can see, I've already entered some of the spreads, okay? And I did this because it is for end of day, okay? And I want to reiterate, these are examples, okay? I want to show you how many different types of positions you can trade off of any market report. In this example, we're using the crude oil inventories. So you can see I've got both a long and a short on crude and a long and a short on the US CAD. In other words, I really don't have any direction whatsoever. The only thing that I am saying with these trades is I'm not sure which way it's going to go, so I'm going to go in both directions. As long as there is a big movement, I can potentially make money. Does everybody understand that? Now, you can also see I have this blue line here, okay? And that blue line actually corresponds to the long position, okay? If you see my long position, you can see that my entry price was $24.88. I put these on there for a purpose. In other words, as long as price is above this line, I am potentially making money. On the short side, I'm in at 1.2450. So if price comes below this, then I am potentially making money. Okay? Does everybody understand that one? Now, what happens if it stays between the red line and the blue line? If it stays between the red and the blue, then I'm losing money, okay? The other aspect of it is you could have a big move up on the Canadian right after the report, and then it could come right back down. So in other words, I could make money up here, take profits, and then, because this does not expire until 3 p.m., it could come back down and I could potentially make money on the short side. Does everybody understand that one? Now, these are just two types of trades, okay? We could also go in and do binaries, okay, because these are spreads. Now, let's go and look at some of the binaries. And we could choose the 9 a.m. to 11 a.m. And I'm going to open this one up. Now, if you have a bias to the downside, you could sell right now the 50-15 and it would be $29.50, okay? On the other side, you could say, okay, well, it may not get down to here, but I believe it will be below 50.35. You could sell that one as well. This would be, and I'm going to write this on here for you. This would be in the money, okay? And this would be out of the money. Does everybody understand that? And that's on crude. Any questions on that? You could also go and you could say, well, you could go to the 11 a.m. and say, well, I actually have a bias to the long side, okay? You could go into the 11 a.m. No, that was 11 a.m., so I have to go to the 12 p.m., so give me a minute to set this one up. So we could go into the 12 p.m. and say, okay, I actually have a bias to the long side, okay? And again, you have different options on each one of these, and you can say, well, I think it's actually going to move up. So your choice would be 50.48 or 50.28, either one that you accept the risk on. Does everybody understand that? So in essence, you have a spread, both long and short. Then you have the 11 a.m. and then you have the 12 p.m. Does everybody understand that? But now remember, the Canadian also will move, okay? So we're going to look at the Canadian, and let's say my bias is actually to the downside on the Canadian, and right now it's trading at 24.92, okay? You could come in here and say, well, I think it's going to move down, so I'm going to use an out of the money to limit my risk, okay? And we're going to open this one up. And I'm going to get rid of these. These are just from the spreads I did earlier. So now we have several positions on. Do y'all see that? Now, the one thing that I do suggest you always do is go in and set a profit target, because sometimes these will move very quickly. Now, in this case, I know I'm short because it's -1. So I'm just going to go in and I'm going to set a $15 target. Okay? And I'm going to do a $10 target on this one because it was in the money. On this one, I'm actually long. So I need to go above, which would be 80. And you could put it at 50. You could put it at 75. This is something that you choose which one you want. On the Canadian, I'm short, so I'm going to put in a $20 target. Now, notice I'm not putting targets on the spreads. Does anybody know why I'm not putting targets on the spreads? Any wild guesses? Because the spreads are not the all or none, like a binary, okay? On the spread, this has until 3 p.m. So I can actually monitor that, but my profit or my loss will be calculated using the indicative price at expiration or when I exit. Does everybody understand that? Now, the maximum risk that I have on the spreads, and if it's still there, I actually have it on the chart, and you can see this is not the one I want. I have a lot of charts open, so give me a minute. Okay, let's use the Canadian. On the Canadian, the long side is $28 in risk. On the short side is $9 of risk. Do you see that? And then, let's see if this is my crude. On the crude side, on the short, there's $32 of risk, and on the long, it's $24 of risk. Now, how is that calculated? Does anybody know? All right, for example, I'm short here because it says -1, correct? So you're looking at the ceiling minus what the entry price was, okay? That's $32. So that's what your total risk is on that position. Now, let's say that at expiration at 2:30 this afternoon, that the indicative index is at 50.20, okay? And that would be a losing trade, but I would only lose $30 instead of the $32. Do you understand that? In other words, I could have a loss that is less than $32. And when is the best time to trade the spreads? When you're expecting a lot of movement. That's when you really want to take advantage of the spreads. Does everybody understand that? Any questions so far at all? And let's say that your bias was actually long on crude and short on the US CAD, okay? Then you would only have short positions on. But that affords you the actual potential when the market comes out to cover that potential loss. Do y'all understand that as well? Now, for those of you that saw the video I did this morning on crude, on the market news, my bias on crude is actually to the upside, and my actual bias to the Canadian is to the downside. But that doesn't mean that's the only position I can take. As long as I'm using a very low risk method, I could potentially go in either direction. And sometimes, for example, right now on the 11 a.m., you could actually see this come down, I mean, immediately prior to the report and fill these profit targets. And then at the market report, it could actually pop back up on the 12 o'clock. So here's your 12 o'clock. Okay. And this is where all you have to do is look right here in the corner, and it tells you the expiration. Okay. So these are short positions, and this is a long position. So it could pop down here, fill this order, and then it could actually go back up by 12 o'clock and fill this order. Do y'all understand that? And I do like using the lines on the chart because it just tells me where the spreads are and gives me the potential visually to see, okay, where am I in correlation to what my entry price was? Now, normally I put those on my trading chart itself. Now, and I'm just going to show you on the Canadian, and I mean, I could be wrong. I have been known to be wrong before, okay, because the market will do what the market wants to do when the market wants to do it. But this is why I actually think that the Canadian will go down. And if this is going to push the Canadian down, that means that crude will go up. Remember the correlation there? So in this case, do you see how the RSI is overextended to the long side? And we've hit an area that's going to resist price. This is why I think it's going to come back down. That's my bias, okay? So why would you go in both directions? Okay, well, as long as you get the movement, okay, then you could actually have protection by going long. In other words, let's say that the Canadian doesn't do what we think it will do, well, we have a position that was only $28 a risk that will send it back up, and that's easy to recoup from a loss. Do y'all understand that? Now, if that's not the one. Let me move some of these around, and I will try to show you. Okay, this is the Canadian. Remember, this has $28 of risk. This has $9. Okay, so I entered at 88. Okay, 88 plus 9 is 97, correct? So if I put in a horizontal line at 97, which is about here, what is that to me? That's my break-even point. If it moves against me, and I'll put this in magenta, if the market moves against me, okay, and that it goes against my short position, where does it need to go to get to break even? 24.97. Do y'all understand that? Now, on the downside, where would it need to go? On the downside, it would need to go at about 20. So let me shrink this up a little. So now on my spreads, I can tell you exactly where this needs to go in both directions for break even and profit above or below. Do y'all understand that? Now remember, my bias was to the downside anyway. Okay? But if it were to move against me, and let's say it goes above 2,500, then I've still made a profit on that trade. Any questions on that? And let's say that we're seeing this bar right here and we're going, ooh, you know, it's 7 minutes to that market report and I believe it's going to go up. You could exit these positions, okay? Now, because I have profit targets in, I could come in here and just click on it, click on buy, and amend the order, okay? Do you see how that took me straight out of the market? Okay, now it does have to be buyers or sellers there in order to take you out of the market. But I could do that on both of these. Do you see? So now I currently have 3 positions on both crude and the Canadian. 1 binary on each and 2 spreads on each. Does everybody understand that now? And sometimes on these market reports, your indicators will give you a good clue as to where the market will likely go. Sometimes it's like, I'm not sure on that one, okay? In that case, you know, sometimes you'll go in both directions. Let's see if we still have that on there. Yeah. Now, remember, this is the spread. This is the binary. And this will move usually very quickly when that market report comes out. And we also have the crude binary. Now, the other thing, remember I told you that typical price behavior is 80 cents to $1 in movement? That's important because if you're going, let's say, $2 out on a binary for crude inventory report, you're probably too far. Even if you nail the direction, you're probably too far out. Do y'all understand that? And remember, we don't 100% know where the market's going to go. What we're doing is saying, I think the probabilities, the potential is that it will go down on the US CAD, or potentially or probably it will go up on crude based on technical analysis. Because what is technical analysis? It's indicators that show us historically what price has done at certain levels. Does everybody understand that? So you mean that the maximum movement is 80 cents to $1? No, the average move, okay? That means immediately 15 minutes after the report, you normally have an average of 80 cents to $1, okay? And again, this is average, and we're dealing with the market. We're dealing with live edge, which is all about probabilities and potentials. I've seen it move 40 cents. And then I've seen it move $2 because, you know, the market report came in and the market reacted differently. Does everybody understand that? I mean, there's nothing 100% when you're trading. Everything is about potentials and probabilities. Now we have about 2 minutes before the market report comes out. On the binaries, and this is something I usually double check just to make sure that I have my profit targets in on binaries. Because remember, binaries are all or none, or you can take profits early, okay? So in this example, I have an 80 profit target on crude. It's a long position. And on the US CAD, I have a target at 20. I do not have profit targets on any of the spreads. Now, you can set profit targets on spreads. All you do is calculate. For example, let's say on the crude, okay, we entered at 50.18. And let's say, okay, if it gets down to 49, okay, then we'll take profits, okay? And you can actually do that. I prefer to monitor those and actually make a decision whether I'm going to exit or not. And, you know, when you're looking at these, remember I told you there's inverse correlation. So again, here's the crude with the support and resistance indicator, okay? And here is the Canadian. Do you see the inverse relationship? This went up, okay? And now I think it's going to come down. This went down prior to the report, and now I think it's going to go up. That's your inverse relationship. And do you see how these grayed out? It's because the market's moving so quickly right now. Okay. Do you see how the US CAD is coming down? This is your inverse relationship. Okay. Okay. Do you see how that profit target was just filled? That's why I have that profit target sitting there. It's, 10:30, market report just came out, and it was just enough to tag that profit target that was sitting there, and you're out of the market now. Now, if you're also looking on the long spread, you're still sitting there, okay? Do not have a profit target on those. Do y'all understand? You can set one. I do not have one. And remember, this has until 2:30 this afternoon to move. In other words, if this just keeps going up and up and up and up and up, then we potentially have the opportunity to make more money. The only cap that we have is on the ceiling price right here at 53.50. You also have the opportunity to say, okay, I don't think this one's going to work now, so I'm actually going to exit this one. Do y'all see that? Same thing on the Canadian as well. You say, oh, okay, I see that I am going to make money on the short side, so I'm actually going to exit the long position. Do y'all see that? Any questions on this, guys? So far, we've had just about a 40-cent move off of this. So is it below the average that we typically expect? Right now it is, but there's still another 12 minutes before that 15-minute. Yes, they do record this, and they do post it and send out an email afterwards. Any other questions? And this is why I love the binary options and spreads. You can do some amazing things by combining them with the different hourly expirations, as well as the dailies, as well as the spreads for market reports that you absolutely just cannot do if you're trading the underlying. Okay. In this case, Raphael, I did. Sometimes I do both the short and the long time expirations on the spreads. But typically with the spread, I'm trying to capture the full movement from this market report. So a lot of times, especially, when the market's not moving as fast as it does in, let's say, November and December, I'm going to use the daily. Because you're trying to capture the full movement, not just a 15-minute window. And again, the Canadian is an excellent example. Do you see the Canadian has not moved that much? Now, the spread is going to capture some of the profits, but if we go down the rest of the day, that's where you're going to make your money on the US CAD, because you gave it the full time. You could, if you wanted, because you've already, made at least about a 1 to 1.5 on the Canadian, Candace, and this has about 24 minutes left, okay? So if you wanted to say, yeah, I'll take profits now, you could. I still believe it might hit my profit target, so I'm going to leave it. And this is what you do. You're always weighing, okay, should I take profits or should I wait and get my profit target? And sometimes it's as easy as going down like to a 5-minute and saying, okay, I don't really like the way this is forming. I might go ahead and take profits, or I'm going to let this bar complete, because this bar just started forming. It's a give and take relationship there. And sometimes I'll just look at the Crude chart and say, if this is going up strongly, this will come on back down. I'll leave my profit target there. Remember, it's negative correlations here. If this one's moving up, this one should move down because there's no other Canadian reports this morning. Again, we're talking potentially here because it'll do whatever it wants to do. It's the market. Sometimes we just have to give a few minutes to decide, okay, now we're going to go down. Any other questions? And remember, this is a market report that you are giving advance notice. The market is going to move at this specified time, more than likely. Okay, crude oil inventories is one of them. Any of the high volatility reports, you have advance notice, the market will probably move at this particular time. Yeah, it's every Wednesday at 10:30, Raphael. With the exception, if there's a holiday, they'll move it to Thursday. Another one that's coming up is this Friday. You have non-farm employment, and that one typically will move gold and the currencies more than the other markets. A great one to trade. Typical movement on the USD JPY is about 80 pips. It comes out the first Friday of every month at 8:30. Again, as long as there's not a holiday. The holidays can move these reports. And this is, you can actually sit down and look at the market report schedule and say, okay, these are the days I really want to trade because we're going to have some movement. These are the days I want to take advantage of the spread opportunities as well as the binaries. Where can you find the actual reports or schedules? I use Forex Factory. Let's see. Let me bring it up for you. And it actually has different filters that you can apply to it, which is what I like about it. So here, if you go to filter, you can filter any of the currencies. You can filter according to the high volatility reports, which is the red ones. And what I typically do is actually look at a weekly view, okay, and say, okay, for example, let's just look at some of the high volatility reports. You have the Aussie rate statement. It usually does move it pretty well. You have the crude oil inventories. The speaking engagements can move the market, just like ECB president speaking or the Fed Yellen speaking. Sometimes it just gets really, really slow there. Tonight you have the Aussie report, retail sales and trade balance. This one will move the markets on Friday, but this is the big one. And this one is one I look forward to every month. And you can guarantee I will be trading that one because it's phenomenal to trade that one, in my opinion. I mean, you can lose money. I've done that before too. But it's a great one if you're wanting to trade market reports. The one thing that I do personally is try to keep my risk low like I did today. And that way, if I am wrong, it does not devastate me. And that's money management, okay? It's just one of the skills that you have to learn to accomplish. USD, JPY, gold, Aussie dollar, euro dollar, British pound dollar, the US Swiss franc, any other currencies that are USD based are going to move off of that market report typically, okay? And this is where you get into the probability of the market moving off of that report is greater than no movement at all. And you saw today how many trades I built off of one report just using the Canadian and crude, okay? On the non-farm employment change, you've got the USD Swiss franc, you got the USD JPY, the euro dollar, the Aussie dollar, the British pound dollar, the USD CAD. It will move also because they have two market reports as well. So that's 6 currencies, okay? And if you had even 2 spreads and 1 binary on each, that's 18 trades, okay? Now, you build up to that. You don't try to start out doing that because, sometimes you'll get confused. Will you receive a recording of this webinar? Yes, they send out a recording. I build them, Raphael, just like I did today. It's not one particular one that I'm doing. The report comes out at 8:30. I do binaries using the 9 a.m. I'll do spreads using the 10 a.m. and 3 p.m. And the one thing I do also is, you compare the risk, okay, just like I did today. Sometimes you have an 11 a.m. that's going to have a lower risk, but a lower probability, in which case I'll go over to the 3 p.m., okay? You're always measuring your risk in correlation to the market movement that you're expecting. And again, if I had went $2 out on crude or even $1 out on crude, I would have lost. Because again, remember I said it was 80 cents to $1 that you expect it to move. And I said that before we ever started looking at the charts. Okay, you've had, and it's right about 15 minutes. We got 1 more minute left. So you went from 23 up to about here, which is really only about a 40-cent move. Do y'all see that? So we moved half of the average, yet we made money on the binary. Why? Because I chose one that had low risk, that was within an 80 pip move would have been about up to here, okay? But I chose one that was about half of that in case we had a slower move off of the crude oil inventory. Do y'all understand that? So I didn't try to come up here to the 80 cent mark. I said, no, I'm going to do 40. Now, why would I do that? Because I know that typically it would have to move above this area to give me my profit target, okay? Because I have a profit target on binaries. So I need to give it room in case it doesn't move at all, or in case I don't get the expected move. Do y'all understand that? So with me saying, oh, it's going to move typically 80 cents, that doesn't mean I go out 80 cents. I give it room to move above and beyond that. And when you have leading indicators that tell you more or less where you are likely to go, then you can have a bias to one direction, either to the long side or to the short side. Any other questions this morning, guys? Okay, if there's no other questions, I want to thank you for joining me this morning. I do appreciate you joining me. And I hope you enjoyed the presentation. I think next week we're actually going to be trading an Aussie report on Wednesday evening. So you may want to sign up for that one as well. It's pretty much doing the same thing where we're staggering binaries with spreads to potentially take advantage of these market reports. Okay? All right. I hope you enjoyed it, and I'll see everyone next week.